Well, hello there, Maverick traders. This is Imri, and welcome to today's currency recap. So we've got a lot going on in the markets today, January 5th, the day before non-farm payroll reports. So equities have reversed course, more than given back all of yesterday's gains. Crypto holding more or less flat, gold giving back some of its recent gains, and oil bouncing after selling off like crazy earlier in the week. So what's behind this? Well, if you look at the talking heads in mainstream financial media, they're pointing towards jobs data showing a strong labor market, which in turn is making the market more fearful of further Fed hikes. And Bullard, one of the Fed governors, has said that he thinks there will be more rate hikes ahead, but that the Fed will reach its ceiling in terms of its interest rate hikes later this year. His vote is one of many. So while his comments are important to a certain extent, you also have to take them with a certain grain of salt as well. Taking a look at the S&P 500, we're teetering on trendline support. Look, my opinion is that we're going to take that trend line out to the downside, and we're going to see further weakness in equity markets still to come. And it's not very different in VT, the total world stock index. We pulled back to those moving averages, which was my call last week, and I think we're now going to drop lower from this moving average resistance. And also, how I said last week, I do believe this rally in China is for real. It's getting quite extended. There is room for a little bit further upside, but I do expect we're going to see a pretty healthy pullback in this ETF over the next few weeks. But the bigger picture still remaining to the upside. We're going to give the market out a -2 in terms of an outlook for now, right? We're below both moving averages. We're below both moving averages, but the 2050 slope is still somewhat neutral. I really would like to see that 50-period moving average curl lower, which it could tomorrow if the market reacts negatively to the jobs report. And on the economic calendar, well, like I said, tomorrow, star of the show is going to be those labor reports coming out of the US. We'll also have some labor reports coming out of Canada, and then there's going to be some inflationary data coming out of the US at 10 a.m. Eastern time tomorrow as well. Now, in terms of currency analysis, cryptocurrencies were holding up for the most part today, thanks to Bitcoin and to a slightly lesser extent, Ethereum. However, some of these smaller market cap coins like Litecoin, Ripple, Cardano, not doing so hot. Over on the fiat side, the dollar was the star of the show today. The yen held its own as well, relatively speaking. And then our biggest losers were the Australian dollar, New Zealand dollar, and the British pound. Now, in terms of velocity, there isn't a whole lot going on here that I'm very excited about other than what's in the dollar and the Canadian dollar. And we're going to see if there's any liability currencies we can pair those two up against. I know there's employment data coming out of Canada. I'm not too excited about the Canadian dollar right now, but we will take a look at the Canadian dollar basket in just a moment, just to keep you apprised in terms of what's going on there. So Canadian dollar basket, we're in this support region, right? We've broken below it slightly, and now it remains to be seen whether we can break out of it. I think that if we do break out of it, any relief will be short-lived, and I do see ultimately further downside in the Canadian dollar. Not too excited about trading the CAD off of tomorrow's news. The US dollar is a different story entirely. Is this breakout out of these blue trend lines for real or not? That's what we're going to find out tomorrow. I wouldn't trust this breakout the day before NFP. So we're going to see tomorrow, if the dollar can maintain its bid or if this was a fake out all along and we're going to see a sharp move lower. So in terms of liability currencies, I do like the Aussie dollar. I mean, we're traded back into resistance. This area has worked really well as resistance, as you can see. So let's see if the Aussie can maintain a sell-off back to the lows from December 20th. That would be an epic move. It would be great to see that happen. I'm hoping that's what happens because that's a much more interesting trade than buying Australian dollar. And the Swissy, like I mentioned, traded into resistance last week, and I'm expecting the Swiss franc to weaken as well. It'll be less volatile than, say, a commodity currency like the Aussie or the Kiwi, however, and the Kiwi is getting close to this support as well, which has worked quite well in the past before we busted out of that support in mid-November. So I'm curious to see whether the zone can hold again or not. So I'd definitely be looking at pairing the dollar against any of these currencies that I've just gone over. The fireworks are going to be early in the morning, so be ready for that. So in conclusion, volatility in FX is picking up again for sure. NFP in focus tomorrow. I do expect fireworks. I definitely expect tomorrow to be a good trading day. But it's going to be volatile most likely, which means always keep in mind proper position sizing and always follow your trading plan. If it's in your trading plan not to trade news like NFP, then so be it. Tomorrow's not a trading day. But if you do have news trading parameters within your trading plan, then ensure that you stick to those religiously tomorrow morning. All right, folks, that's it for me. Thank you very much. We'll see you soon.